the thing that really stood out to me, I'm just going to go to 2 days, not 7 days. First, I want to look at 2 days. This, is mind blowing to me. I'm really, really, this is what stood out to me. This is what I was posting on X about, is this drop here. This was a drop of 4.6 million. This is even bigger. Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. This one I'm super excited about. The Intel, ticker symbol INTC, $30 call expiring June 20th. Also, I am looking at and holding the Intel $50 call that expires January 16th of 2026. So a leap from now, I did buy one of these, actually two of these contracts. Wow, aggressive on Friday. So feeling pretty excited about that. And really, that's just kind of like a rotation from this one that, expires sooner, the $30 call into the $50 call that expires a little bit later, because I did sell some of these, three of them, it looks like, on Friday at 20%, greater than 20%, and 30%. So, that's pretty good. So from that, I made, right around $50 about. So that's pretty good. And I am still holding some contracts. It looks like I've got, I was expecting two, but it looks like I have three that I plan to sell or trim out of at 80%, 100%, and 200% profit. So it will be really nice if that happens, but I do think that we might see a little bit of a cool off following the pop that we saw on Friday, but maybe not. We'll have to look at the data and see what that tells us. But yeah, here you can see in the stock price in green there that we did get a little bit of a pop out. Same with that premium. It's just been like getting bled down, pushed down so much, the blue premium there. And then my average, of course, is in red there. And so, yeah, starting to be in the green. So that's nice. And so, for this one, like I said, it looks like I have three contracts and my average is 68 cents. The low from Friday was 49 cents, so in the red. But the high and the average were both in the green for me, so that's looking pretty good. I feel like it probably closed right around my average, so nothing to go on about. I do think it spent a lot of time around 67 cents, so just below my average. But, I do think that this could be kind of, a breakout moment and that this could be going higher. So I'm feeling pretty good about that. And with that being said, since I did trim out of my position at, let's see, what did I sell at? I sold at 82 cents, which I think was actually supposed to be a 10% trim, which was this one, believe it or not. So I had, let's see, I want to click over here to see it. So yeah, up here you can see 82 cents, 85, and 89. I think I had a sell at 75 cents, which I believe would be 10%. Makes sense from about 70 cents here to being at 7 cents higher than 68 to 75. So I had a limit sell at 10%, but it got filled at greater than 20% at 85 cents, not 75 cents. So that was kind of a nice surprise. Surprisingly, though, the one that I had placed at 20% profit, which was at 82 cents, that got filled at 82. Would have been nice if that also got bumped up to 85, but whatever. And then the 30% trim was at 89 cents. So, I feel good about that. I'm glad I'm still holding some contracts, and I do plan to, add one more back if it dips to 65. So that lower my average a tiny bit, but kind of negligible. It really just, put some more back into the position, so I'm ready for the next pop. But anyways, looking at the data over here, we can see the spike in volume in blue there, and that does correspond with a spike in premium of, $2 million. So that's a good amount of premium there. Other than that, though, we haven't really seen too much notable activity. Following that spike and all this, little blips in volume, we have seen that open interest go up over time. So that is looking pretty good. And then if we look at the other contract, that $50 call that expires in January, let's see, this looks like it's maybe a little bit newer of a contract. I'm not really sure. They both go back the same amount of time. That could just be when I started tracking them too. But with this one, what we can see is this spike over here corresponded with a spike in premium of around, let's see, 160,000, 163 it looks like. And then this more recent spike that corresponded with a premium of about 95. Interestingly, I was thinking that, the open interest was coming down, but we actually don't have that data yet. And so with this spike, I would expect open interest to be going up more. So we'll have to see. It'll be interesting to see next week. But generally, the open interest has just been kind of flat. And I'm actually kind of surprised. This was, probably just, a whale day trading, on this day, because we have $63,000 traded on that day. But then if we scroll over here to see the change in open interest, $63,000, only 300 contracts were added. So it's not, a super substantial amount. And we've also just seen, pluses and minuses around here, oscillating, not changing too much. So it's, 67 to a little less than 67 to 67, a little less than, so it's just been kind of flat. And so maybe with the spike here in volume, spike here in premium, maybe we're going to see a spike in open interest. So that would be a good thing to see. But, we'll have to wait and see. And so if I do get over here to the chart, what we can see is this beautiful gap up. I was posting about this on X. I was posting about Intel, just like wondering, like, the data, what am I looking at? It just looks really good. And it ended up being, spot on. So that's like, I'm getting better at understanding the data in unusual whales and utilizing it for trades. So, I'm just excited about this. And I did, pick up some more contracts on this day, but, I feel like I picked them up at pretty low prices. And maybe, I want to come back to this one. I got two here at 64 cents. So I got one at 33 and one at 31. What was the low? 25. So, I got lower than the average, on average 32 cents. So, I feel, fine about that. I think that this will be going higher, but to $50, let's look at the chart, because let's see, 30 cents is this, or $30 is this other one, then 50 over here. But yeah, with this gap up, what I could see it pulling back to, the close from Thursday, which was 1967. It does look like I have an alert here at 1996. And let's see, what was the high? That was 1995, the high on Thursday. See, I'm just going to leave that alert there. Actually, maybe I want to check to see what that alert is. Is that below? Yeah, okay. So I'm actually going to change it to 19. Oh, I'm just going to change it to 20. Let's just leave it at 20. And that would, get my attention to it. So yeah, $20 there. But yeah, it's possible we could fill a gap here. That's let's see, at 1967. So yeah, actually, let's do that. Let's alert myself, at that specific level. If I see it come down to 20, that's going to stand out to me no matter what. And actually, maybe I want to go back to over here. I got this buy here, buy for both of them. Yeah, so I'm not going to note $20, which I might, put up here. But I'll just keep my eye on it. But yeah, with this gap up, what I could see is maybe, pull back to around here, corresponding with the consolidation going across this way. So that seems, somewhat reasonable, feasible, coming down to around 21, about 50 cents from where it's currently at. And also, maybe it's coming down to this 786. That is based on, this level over here. But really, I just think like in between that range, so from about $20 up to around 21, I think it could be finding support there before continuing higher. We see this nice spike in volume. We see the RSI starting to trend up. And then we have the histogram here for the MACD starting to go more green. So that's looking good. But yeah, why did I pick $30? We do have this gap here at 28.87. I think that could get filled. But, I could see myself holding this for beyond June to potentially be getting up to around $50, which looks like it was right around the high of December 27th, 2023. The high was $50.60 marked there. So, maybe that was like a little over a year ago. Maybe a year from now, we get back up there. It seems kind of reasonable to me, although I think that we could have some trouble, getting above this uptrend, once we fill that gap. So maybe we need to consolidate here, really fill that gap with some price action. So, like I said, all these contracts, if not all, will go to zero. So this one, with the $50 strike expiring in January of next year, that may be going to zero. But, it doesn't mean it can't make money in the meantime. So that is the intention. But yeah, let's look over at the data from Unusual Whales. So I'm just going to type in here Intel. So we can see from the day of Friday the 17th, what we can see is that price action, this is following a gap up, kind of hung out above that level. So, this, gap up, it hold the gains. It didn't retract. So that's looking good. I feel like that's pretty good. Also closed in the upper half, close to the upper quarter, if not in the upper quarter. So I think that's looking pretty good. And then we see that the net put premium in red has come down over the course of the day. So that is bullish. And then we see that the net call premium did go up and stayed up over the course of the day. And we do see that volume being increased. And so that makes me think more calls are being bought. That is bullish. And like the puts that were being sold are probably more expensive because they don't counterbalance the calls that are being bought. So there's a net increase in that volume. So I think that's good. And what we can see for this day is that the net call premium increased by $2.27 million, which you can see over here, whereas the net put premium decreased by 4.64 million. And so, in thinking about that, it's like, well, why is it green at the bottom if the net put premium went down so much by more than double what the net call premium increased? And so it's probably just because, the net call premium, those were cheaper contracts, a lot of volume pushing that up, whereas the net put premium was probably fewer contracts that were more expensive. And so, smaller volume decrease. And so that's why you see a net increase in volume over here. And so that would actually make me think that people were shorting Intel massively, over $4.5 million. But then that put premium betting on it going down that was sold. So that's basically, whether it's not being short, it's not necessarily being long though. It's just not being short anymore. I feel like that's people taking profits on puts that they had, taken that 4.64 million out of it, and then maybe rolling that into calls, half of it into calls to boost that up 2.27 million. And it actually does make sense that short positions would be taking profits around where it's at now, because if we look at the chart, Intel, I can go back to the weekly, and we could see, actually, I guess, yeah, maybe I was zoomed out a little bit too much. But yeah, I mean, it was, up at 62 over here, coming down. And so, it's been pretty short. I don't really need to show it on the weekly to illustrate this. But just, yeah, like going up to this high of $50, that was the high of over a year ago. It's just been pushed down so much. And so, also, with there being like kind of a double or triple bottom here, and, putting in higher lows, there's no bullish divergence with that, but higher lows in the RSI, higher lows in the stock price, really from here to over here. So, that could be suggesting a bottom. And if I do switch over to the weekly chart, we see this 786 here in yellow at 1886, currently well above that now. That is, let's see if I can show you here. That is this retracement going from the low that was hit on the 11th of September 2009 of $6.92. and actually, this is the weekly, so it might not be that exact day, but the week that ended on the 11th of September. The low for that week was $6.92. And then going up to this high, that's at $62.70. That high was hit in April of 2021, at the end of that bull market, getting into the bear market. And it's just been, aside from this rally, just, a big moves down for Intel. And so it makes sense for those who are holding puts to be taking profits. And so that's what I see here, taking that money out. Expensive contracts because they made money on them. So no longer being short, rolling that money into calls or, others going long. So I think that this just looks phenomenal. But the thing that really stood out to me, I'm just going to go to 2 days, not 7 days. First, I want to look at 2 days. This, is mind blowing to me. I'm really, this is what stood out to me. This is what I was posting on X about, is this drop here. This was a drop of 4.6 million. This is even bigger. This was a decrease of net put premium nearly $16 million, $15.98 million, whereas net call premium on the 16th increased by 1.4 million, 1.43 million. And so this is just like $16 million being taken out of these puts. But what you see is the volume in green there increased. And so that tells me that puts, those who are holding puts, those who are short, made money as Intel came down. Then they're taking profits now because they think the bottom's in or is near or, whatever. And so they take that profit and, that's a small number, a small volume of expensive contracts, taking that product, taking that, what's the word I'm drawing a blank on? Taking that profit, I'm an idiot, and, then rolling that into a lot of cheaper calls. And so that's why you see an increase in volume. Small number of expensive puts being sold, a large number of cheap calls being bought. And so, with these contracts, you want to buy them cheap and sell them expensive when the play is done. And so we're seeing bottom signals here in the unusual whales data for Intel. So I'm just like super stoked about this. I noticed this. I'm getting more familiar with looking at this data. Stood out to me like a sore thumb. This is a total bottom signal. And if we look at it over the past 7 days, we can see this, kind of shifted from being not that much volume, more selling, calls and puts, not really being too crazy, and puts, increasing a little bit. But then we first started to see puts decreasing here. This was a drop in put premium, a net decrease in put premium by nearly $6 million, whereas net call premium only increased on the 13th here by less than $1 million. And then, so here we're starting to see this yellow, bottom in the price starting to go up. This is just beautiful bottom signals in my view. But with that being said, looking at the chart, because we did gap up, we might see a little bit of a cool off. We might see a little bit of a retracement. And, I suspect we will go above 2162. But if I were to do a retracement, let's say that is the top, and we pull back to 1873, or like based on that low, I should say, and then we go up to 2162. The 618 is 1983. And so, maybe we do pull back to that level. That would correspond with, while not necessarily a gap fill, which would be getting to the close from Thursday the 16th, which was again at 1967, but getting down to around $20. That could happen, but let's add another level here. I'm just going to add the 50% level just to consider that. That's coming down to right around 20. So yeah, I could see this pull back by, $1.50, and that would be, a great opportunity to establish a position, whether shares, contracts, whatever. I like the longer dated ones. And yeah, I mean, I just think Intel is going to have like a rip your face off year, following, the past couple years of it just really being decimated overall. But I should also note too that, in the after hours, the price is at $22.14, so up an additional 3% following the increase of 9.25% on Friday trading hours. And so the after hours price of 22.14 is above the high from Friday. So overall, Intel is just looking phenomenal. So I'm just super excited about it. I'm really happy to be involved in it. And I have to say, I have to give a shout out to Mr. Chart Norris. I was going to say Mr. Shart Norris. Mr. Chart Norris on X. It's Kolov 23. I think he's a Polish guy. He posts great charts. I follow him. I think he's a great resource. And he put this on my radar when, the stock price was up here. And I didn't really, let's see, when did I start to establish? It was a different contract. It would have been probably this contract. So I started establishing a position back on December 5th. So, right over here when it really started to come, I guess right here where my position was started, where it started to come down. And so, I managed to like be patient, establish this position, basically while he's posting about, it being painful, how it's going lower. But that's just, if something goes lower than the price you enter in at, that's just more opportunity. And so that's how I viewed this one. And, I think that this is, I made $50 here so far. I think I'm going to be making hundreds with this. So I'm just stoked about it. And I feel like you could probably tell just how I'm rambling on about it. But with that being said, let's move on to the next one.